Markets head into the new trading day with softer than expected U.S. inflation report continuing to dominate sentiment. June CPI came in well below expectations, reinforcing the view that disinflation is back on track after the spring rebound and prompting investors to scale back expectations for additional Federal Reserve tightening. Treasury yields fell, led by the front end of the curve, and the U.S. dollar weakened broadly as traders reduced the odds of another near term rate hike. That said, Fed Chair Kevin Warsh maintained a disciplined and broadly hawkish tone in congressional testimony, stressing that one encouraging inflation report is not enough to declare victory and that policy decisions will remain firmly data dependent. The focus now shifts to today's U.S. producer prices report for confirmation that producer price pressures are also easing. Equity markets responded positively to the inflation surprise. All three major U.S. indices finished higher, led by the NASDAQ, as lower yield supported growth in technology stocks. Futures are modestly firmer heading into the new session, with investors encouraged by the prospect that easing inflation could reduce pressure on the Fed, while remaining mindful that policymakers have not yet shifted away from their inflation fighting stance. In commodities, crude oil remains one of the key macro stories. Prices pulled back from their intraday highs after President Trump abandoned plans for a 20% reimbursement fee on shipping through the Strait of Hormuz, easing some immediate supply concerns. However, oil still finished higher as geopolitical risk remains elevated. Trump confirmed that military operations against Iran will continue, while also revealing that talks with Tehran are ongoing, highlighting the market's continued balancing act between diplomacy and escalation. Longer term, one major U.S. investment house noted that Gulf producers are accelerating pipeline projects that could eventually reduce dependence on the Strait of Hormuz, though that offers little relief to today's supply risks and leaves the near-term geopolitical premium in crude largely intact. Looking ahead, today's calendar is centered on U.S. producer prices and the second day of Chair Warsh testimony. Markets will be looking for confirmation that yesterday's benign CPI reading marks the beginning of a broader disinflation trend, while any deviation from that narrative has the potential to inject another round of volatility across currencies, equities, and rates. That's all for now.